Welcome to The Explainer. Today, we are digging into a company you've probably never heard of, a little Swedish tech firm called Intellego Technologies. And let me tell you, they are suddenly putting up some numbers that are, well, they're absolutely astonishing.
So, how do you measure something you can't see? Well, that's the exact problem Intellego has built its entire business around solving. And they're focused on one of the most powerful invisible forces out there, ultraviolet light, UV light.
And their solution? It's brilliantly simple. It's basically this patented ink. Think of it like a pH strip, but for UV light. It just changes color when it gets hit with the right amount of UV. So you get this super clear visual confirmation that your disinfection process, or maybe an industrial curing process, has actually worked the way it was supposed to.
And this simple little idea, it has led to an absolute explosion in growth. I mean, look at this. In just the first quarter of 2025, revenues shot up over 150% year over year. To put that in perspective, they made almost as much in that one single quarter as they did in the entire previous year. That's just wild.
But here's what really gets an investor's attention: the profitability. It is staggering. In Q2, the company posted an operating margin of over 70%. I mean, come on. Those are the kinds of numbers you see from a high-end software company, right? Not someone who actually makes a physical product.
Okay, so you've got to be asking, what is going on here? How does a small company suddenly shift into this hyper-growth mode? Well, the answer comes down to two absolutely transformative partnerships.
Yeah, Intellego has managed to lock in massive deals with two global titans. First up, you have Henkel. They're the world's biggest supplier of adhesives, and they're baking Intellego's tech right into their quality control process. And then there's Likang, a huge player in Asian healthcare. They've signed a deal with minimum commitments of over 3.5 billion Swedish Krona. And that's just for the Chinese market. Unreal. And what's so crucial to understand is that these aren't just, one-off sales. Nope. These are long-term deals that literally embed Intellego's technology into their partners' global operations. So from an investor's point of view, this gives you incredible visibility into future revenue. It just massively de-risks the whole growth story. Okay, so you see all this, and you have to wonder, is this for real? Is this success actually defensible? I mean, what stops a competitor from just swooping in and copying the whole thing? Well, Intellego's competitive advantage, what investors call a moat, is really built on three key pillars. First, you've got the intellectual property. Strong patents protecting their core tech all the way out to 2042. That's huge. Second, their brand and quality. Their product is scientifically validated as being the best. But it's this third pillar that's arguably the most powerful. The switching costs are just incredibly high. And this is where it gets really clever. This explains those switching costs perfectly. Intellego is basically becoming an essential ingredient brand. Think Intel Inside for industrial processes. Once a giant like Henkel has designed and validated its entire manufacturing process around Intellego's product, imagine the cost and the risk of trying to rip that out and replace it. It's just prohibitively expensive. All right, let's talk about the big valuation question, because this is where the story gets kind of puzzling for an investor. You see this elite performance, right? But the price, it feels modest. You have all this insane growth, all this profitability, but the stock price just doesn't seem to be reflecting all of it. So what gives? Okay, first, just look at this performance gap. It's a chasm. Intellego's recent operating margins are pushing 70%. Now compare that to its much bigger, more established peers. Their median is sitting below 17%. I mean, they're not even playing the same sport. It's not even in the same league. And this table here really drives that point home. It's a direct comparison against its much, much larger peers. And you can see for yourself on the metrics that every investor cares about, we're talking revenue growth and profitability, Intellego is just in a class of its own. But despite all that outperformance, a real disconnect pops up when you look at how the market is actually valuing the company. So here's the bottom line. The really crucial point is this. Based on their own forecasts for 2025, the company's trading at a forward EV to EBIT multiple of just 6 to 8 times. That is a huge discount compared to its peers, who are barely growing. A valuation that low tells you one thing. The market is deeply, deeply skeptical that this story can last. And you know what? That skepticism isn't coming out of nowhere. It's not completely unfounded. Which brings us to the other side of the coin, the bear case. The very real, very significant risks that could derail this entire thing. And number one, first and foremost, is execution risk.
Think about this. As of mid-2025, the company had 64 employees. 64! That tiny team now has to figure out how to service some of the biggest, most demanding corporations on the entire planet. That is just a monumental challenge.
And beyond that sheer scale-up problem, you've got huge customer concentration risk. I mean, their entire future is basically riding on those two giant partners. What if something goes wrong with one of them? And finally, there's working capital. When you grow this fast, it puts a massive strain on your cash. Can they actually collect money fast enough to fund their own hypergrowth? So after all that, what's the takeaway for an investor? Where do you land? Well, it really boils down to a single, powerful trade-off. And this really gets to the heart of it, this central tension of this whole story. On one hand, you have this amazing, validated technology with a massive, highly visible growth runway, all thanks to those huge partnerships. But on the other hand, you have the immense operational risk of a tiny company trying to handle its own explosive success. It's a story of absolutely incredible potential, but it's balanced on the knife's edge of execution.
Which leaves us with the ultimate question for anyone looking at this stock. Is this an industrial giant in the making that you can buy today at a bargain price? Or is this whole story just a little too good to be true?